5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The global chipmaker sell-off gathering pace as concerns over AI investments mount. President Trump accuses China of election interference in a primetime address. China denies the allegations. And escalation fears, concerns growing that tensions between the US and Iran will intensify after a sixth day now of strikes. Asia, though, once again providing a catalyst for a tech sell-off. Let's get a check on global markets. This time, Winnie Sue, it's not Korea. Winnie is in Hong Kong for us.
Yeah, good morning, Bonnie. As you just mentioned, we are seeing this new model from China's AI startup, Moonshot, and that is posing a bit of a threat to this global AI trade. And that is coming as investors think that this Chinese product can actually turn investors to choose more cheaper options versus what is already available. So that is sending some shocks across the technology shares overall in Asia as well as in the US. Now, overall sentiment is lower. We have MSCI Asia here down about 3%, headed for its lowest in about 2 months as concerns continue to rise around the AI spending. We have Taiwanese stocks, in fact, headed into a correction territory, down about 10% from its June peak. Also, some concerns after TSMC's earnings, unable to impress investors. Now, flip of where we take a look at Japanese assets, because similarly, we have the Nikkei 225 in a technical territory with the Kioxia shares down about 16%, seeing its market cap halved in just the past month. Now, it was Japan's most valuable company just last month. So you can see that sentiment turning really quickly. When it comes to the cross-asset space, we are seeing Japanese yen strengthening just a bit after Prime Minister Takaichi mentioned that it is important for pension funds to invest further in domestic assets.
Winnie, a lot happening in Asia this week, and it's infecting the rest of the world. Let's get to London for a look at Europe. Obviously, in Britain, more preparations for what might be announced next week. Justina Lee, what's happening?
Good morning, Vani. Now, it's a classic risk-off day in Europe today with the Stocks Europe 600 down 0.8%, of course, also dragged down by technology shares. And the only sectors sort of in the green are the more defensive ones like utilities. And you know it's a defensive day because the FTSE 100 is down a little bit less, and that's because it tends to have less of those, growthy tech names, more value names, more defensive sectors. And also a sign of the classic risk-off mood today. I mean, we haven't seen a big move in oil, but generally bond yields are down, kind of reflecting some of the equity weakness. Now, Bonnie, as you mentioned earlier, it's a big day for UK politics, with Andy Burnham set to take over leadership of the Labour Party before becoming Prime Minister on Monday. And now we flip the board here. One surprise to a lot of market participants. Actually, the pound has done pretty well, even with all this political instability. We can see that this pound, the pound against the dollar has strengthened quite a bit lately, with actually the UBS Global Wealth Strategist actually saying that this has turned out to be a tailwind rather than a headwind, especially with kind of a lot of investors covering their shorts in sterling lately and maybe deciding that the pound is a little bit underowned. But of course, it all depends on what policies come next, and we're going to have to see just right that next week.
Yep, that'll be a thread running through all of next week. Justina Lee, thank you so much. Here in the United States, you'll see futures pointed lower, particularly Nasdaq 100 futures. This sell-off continuing. We've seen it all week, even as most of the evidence suggests that companies are really doing just fine. TSMC even, for example, we knew most of these details earlier in the week. It didn't prevent the sell-off earlier in the week, even though TSMC's metrics were all pretty great. It is not preventing it today either. I will say the China announcement and the speech from President Xi Jinping about how China is all in on AI isn't going to help moods here today in the United States. Also, it's a little bit of an earnings theme, right? We also had Netflix disappointing investors, and that stock is lower pre-market as well. Let's get to yields. We'll be talking to Andrew Sheets a little bit later on and what's next for the Fed, but essentially the market is all but priced out a July increase at the very least. But we're down a couple of basis points on the 2-year yield, just below 412. Not once again, are we down on the 30-year yield? We're still at 507, so that steepening is just gathering pace just a little bit here for yields. And then we are keeping our eye, of course, on oil, holding on to those levels that we've seen for most of the week, 80 on WTI and around 85 on Brent. Let's get to some individual market movers now. Back over to London and Chloe Melly.
Good morning, Bonnie. The tech sell-off that we have seen in Asia and Europe is now spilling over into the US and sweeping up all of those big names. And in particular, Intel is down more than 5% this morning, with investors really questioning this really super high valuations in that tech sector and questioning whether those investments into AI can actually deliver those lucrative returns. Moving on to Netflix, which is also falling quite significantly this morning after its third quarter forecast disappointed investors. It seems the company is really struggling to boost and revive that engagement, and so we're down almost 10% in pre-market trading this morning. And finally, Intuitive Surgical is also down this morning after the growth for its surgical robots slowed to the weakest pace in 4 years, and that was due partly to the growing uptake of GLP-1s and also changes to the Affordable Care Act subsidies. And so we're down more than 11% in pre-market trading this morning.
Chloe, a lot of red on the screen today. Thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we discuss defence spending with Micael Johansson, CEO of Saab. Later in the hour, we're going to look at inflation concerns, growth concerns and more with Andrew Sheets of Morgan Stanley. A surprise breakthrough from Chinese AI startup Moonshot is sinking AI and semiconductor stocks today. Moonshot's new Kimi K3 model is deepening worries that US companies could use Chinese models more and invest less in, for example, Anthropic. Bloomberg intelligence analyst Matt Bloxham joins us now. A little bit of a deep-seek moment this morning, Matt. How good is Kimi K3 and should we be this worried?
Yeah, I think it's still early days to kind of see how good this is going to be against some of the big like Anthropic, OpenAI models, but definitely a sign of what's happening in the market. The corporates are getting increasingly sensitive and focused around the cost of using AI models. So anything that can potentially deliver similar or equivalent performance for substantially less money is going to become more popular, and so I think that it's going to kind of create a new pressure. Now, I think a lot of US companies may feel sensitive or may even come under pressure not to use Chinese models given the geopolitical tensions, but it is going to, I think, create pressure for those big US model developers like Anthropic, OpenAI and Google to think about how they evolve their models so that they kind of keep the performance high but with lower costs.
How much is the speech from President Xi Jinping impacting markets today? So he basically said, we're all in on AI and we want it to be open. We're going to send training courses to lots of other developing nations.
Yeah, so I think this, the technology battleground between China and the US is very much about these kind of third countries where they have more relaxed views on where they source technology, and that's a big opportunity for a large number of technology companies. And so that's, I think, where the kind of battleground for growth is going to be. So I think it's no surprise really that China is all in on AI and is looking to expand its influence on AI beyond China. But it's definitely kind of very much a kind of warning sign for the US companies that they kind of need to continue to develop and need to think about how they develop their technology to make sure that those third countries remain a lucrative growth opportunity for them too.
This Google Gemini delay, Matt, how serious is it for Google?
I don't think it's too serious, but it does highlight the fact that, as AI models have evolved very rapidly over the last few years, it's now getting harder to deliver significant incremental gains. And that when you do deliver those, you've got the likes of the US government kind of putting greater scrutiny on how widely you can make those things available. It kind of seems to me that, Google's kind of got a lot more checks and balances in place around how it develops software compared to some of its new arrivals. It's having to rethink which of those checks and balances it keeps and which it can relax to remain competitive. So I think we will see Google come out with this product relatively soon, and I think it's going to be competitive enough to keep them in the mix with OpenAI and Anthropic. I think, to be honest, Google has performed much better than people worried perhaps a year or two back in the AI race. I think a lot of people had written Google off and that AI would kind of really make a big dent in their market share, but that's not been the case. So I think Google is going to continue to be a strong player.
All right, Matt, thank you so much. We have to leave it there. Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. President Trump accusing China of interfering in the 2020 U.S. elections. In a primetime speech, he claimed the Chinese government stole 220 million voter files and other sensitive data. China denied the allegations. The accusations come ahead of Chinese President Xi Jinping's visit to the U.S. in September. U.S. intelligence agencies have previously debunked these allegations. Burberry sales grow for the first time in 3 years. Same-store sales rose 5% in the first quarter, led by the performance in the U.S. The brand highlighted sales of its rainwear with its Portraits of an Icon campaign, featuring celebrities from Tiana Taylor to Wu Lei. SpaceX was forced to abort its Starship rocket mission when some of its engines failed to fire up. The company says it will aim to launch its Starship rocket again in a few days. Coming up, Swedish defense giant Saab's stock soaring after reporting strong second quarter profits. We'll be speaking with the CEO Micael Johansson next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Saab shares are rising after the Swedish company posted profits that beat estimates in the second quarter. Saab CEO Micael Johansson joins us now from Stockholm. Micael, congratulations on your quarter. The NATO summit recently generated a $5 billion contract for your radar detection systems. I'm curious, what is more important going forward, that European defense spending rises or that there's greater coordination of European procurement?
Well, thank you. Thank you for having me. Well, yeah, the NATO summit was a big success, of course, and NATO announced that they will go and buy the GlobalEye, roughly 10 aircrafts. We're working the contract as we speak. It's not either or. I mean, it's really important that Europe gets together and do more collaborations to create scale in Europe. But I do think the NATO summit really pushed the message of that European countries and companies now are stepping up to take this seriously about handling their own security and investing lots in defense. So it was a really good summit from that perspective, but we still have a way to go when it comes to collaboration and doing less fragmentation in Europe, I think.
Mr. Johansson, could you tell me what is the annual production rate currently on GlobalEye, and will you need to spend additional capex in order to increase capacity?
Well, roughly the rate right now has been like 2 aircraft a year, and we are now aiming for somewhere between 4 to 6 aircraft a year to be able to deliver that rate around 2030, which we have our investments ongoing to do. And of course, it will take investment, but it's not such huge investment to increase capacity like that. And also, since Canada has selected the GlobalEye, we will also set up a hub in Canada to do all these things in industrial collaborations with Canadian industry. And maybe in Europe as well, another hub. So it will not only be in Sweden, even though Sweden will be important, our hub in Linköping, Sweden. So we're going in that direction, and it's going really well.
Can you give us a little more detail on the capex spending? How much roughly, and what are you thinking of spending and where in Canada?
Well, I think, as we've said, this will create like 3,000 jobs over time in Canada, and the investments will be on an infrastructure perspective, facilities, of course, together with Canadian industry, and also missionizing the business yet to become a GlobalEye. And then we, of course, will continuously take the responsibility for certifying the final capability, and having the type certificate for the capability will be on our side. So it will be a collaboration with companies like Bombardier and IMP and CAE and others in Canada. So a big portion of the supply chain will, of course, be focused on getting that done in Canada as well. But exactly in terms of billions of Swedish, I can't really tell. But I mean, our average yearly spending now is 10 billion Swedish roughly $1 billion US or euros a year now in only capacity building. So this is going to be managed within that.
Let's move to Gripens. So there is a Ukraine order now that's finalized for 16 Gripens E. You previously said your annual production rate was around about 15. Do you need to expand that so that you can make 20 to 30 per year?
Absolutely. I would say rather sort of between 25 and 30. So we're doubling the capacity more or less as we speak, and that needs to be done in a very short time frame. We are getting there quickly. And but also there a potential sort of collaboration. If Canada would select to go dual fleet, of course, that would become sort of a hub for us. But there are also other potential customers. And of course, we're trying to involve also Ukrainian industry into this because they are taking this in batches. This was the first batch. And they've said many times that they want to go further batches towards 150 aircraft. So, of course, in the end, Ukrainian industry will be involved as well.
France and Germany terminated the FCAS contract back in June. Have there been talks or agreements between Sweden and Germany or between yourselves and Airbus about a sixth generation fighter?
Well, not really in a sort of a specific way. Of course, we're touching bases on this and making our assessments. I really want to say that Sweden has its own sort of FCAS program ongoing, which is now focused on the collaborative combat aircraft, which we call CCA, complementing the Gripen fighter going forward. We have a new Gripen Echo version now in the market, which will be upgradable for a long time. And if there will be collaborations, we will, of course, have our doors open, but it has to be aligned from a security policy perspective, politics to politics, but also from an Air Force to Air Force perspective. You have to have the same view of capabilities and then, of course, industry logic. So it's not only an industry thing to go about sort of trying to do something on the fighter side. All of that must sort of be in place. But we will make our assessments, keep our doors open, and we will see what happens. But not sort of a specific avenue has been launched from our side yet.
You mentioned how you're spreading out geographically a little bit. Can you continue to expand margins with this geographical expansion?
I think we can, absolutely. I mean, we're creating scale on sort of OPEX costs in the company, of course, but while we continue to increase our spending on R&D, that we will never compromise with. And we are used to having presence in many countries and doing sort of several hubs together with other countries makes sense to us. We're not the biggest countries. We are the biggest engineering company in Sweden today. We employ net up like 3,000 people a year into our company. So, of course, we need to expand outside Sweden to grow the company. And I still think that will also have a positive effect on the margins going forward. So I'm not worried about that. It's a way of growing the whole company.
Well, Mr. Johansson, we have to leave it there. But thank you so much. A pleasure chatting with you this morning. That is Saab CEO Micael Johansson. Coming up, we'll look at the challenges small businesses are facing getting their tariff refunds. This is Bloomberg. Small businesses were hit hard by President Trump's sweeping tariffs. But as Wall Street Week found out, getting a refund after the Supreme Court struck those tariffs down is not quite as easy as it sounds.
Now the Supreme Court has ruled, and there's a fair amount of money, according to press accounts, that has been refunded of those tariffs. How much of that have you realized?
None.
Well, how does that work?
It's pretty frustrating, actually. So I have to contact my vendor, who is in turn waiting for a refund from the shipping company so that I can still pass through that refund to my customer as well. It's just really a big mess all the way around.
But what about now, going forward, putting aside for the moment what's already been paid? Has your business largely returned to where it was before the tariffs?
I want to say it's different. So prior to tariffs and prior to the expiration of R&D tax credits, we did a fair amount of work in R&D. That went away. I believe that the tariffs had the effect of slowing down the pace of innovation because there was so much waiting and unpredictability in components. So that really slowed that process down. The tariffs are not doing anything to move the supply chain in the way that they are intended to move the supply chain. The reason is that the tariffs simply aren't high enough to make it painful enough for behaviors to change. I'm not
Bloomberg Wall Street Week's Simon Hampton joins us now. So Simon, how much of the tariff revenue has been refunded to businesses?
So it's a little under half at the moment. So there's about $166 billion of tariff revenue collected across around just over 300,000 businesses. About 71 billion of that has been refunded at the moment. And as you heard there, it's a pretty hard process for some businesses. You know, FedEx or UPS is the shipper, and that's where the refund goes to, so they have to go to other businesses to get the refund to flow down. And it's a big undertaking for customs as well to build a new system to give out these refunds.
And even if it arrives, how has the environment changed for these SMEs?
Well, it's really tough because, you know, their markets have contracted. They've been changing their prices a lot. We spoke to a wine importer who changed his prices 4 times after the tariffs came in. So it's been a really unsettling time, and I think that's what they're looking for is just some stability.
Well, it's a fantastic story and well reported out. Bloomberg's Simon Hampton, thank you. And do catch Bloomberg Wall Street Week tonight at 6 p.m. New York time, 11 p.m. London time. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The global chipmaker sell-off gathering pace as concerns over AI investments mount. President Trump accuses China of election interference in a primetime address. China denies those allegations. And concerns growing that tensions between the US and Iran will intensify after a 6th day now of strikes. So let's get to those markets. As you can see, futures are pointed lower. We're off our lows of the session, but Nasdaq 100 futures leading the pack. A global tech sell-off continuing today, even after TSMC beat and gave us some more details. But in Japan, for example, flash memory maker Kioxia was down 16%. It's lost more than half its value in recent weeks. We also had heavy selling in Taiwan. That index, the TAIEX, now in a technical correction, and it continued across Asia. We also had some announcements out of China overnight that seem to have created this DeepSeek moment. We have a Kimi K3 model that is spooking investors. And we also have Xi Jinping all in on AI, an open kind of a version of AI in a speech last night. So that's impacting the trade as well today. In terms of yields, we are seeing the front end come down just a little bit, just another 2 basis points, but we're back down to below 412 now, even as the 30-year yield stays pretty elevated, just below 507 at this point, and that 10-year yield continues to stay above 450. We're at 453, even though we're down 2 basis points today. We'll speak about all of that in a moment with Andrew Sheets of Morgan Stanley, but let's get to some individual pre-market movers. Here's Chloe Melly.
Good morning, Vonnie. The chip sector is seeing that extended sell-off this morning, with Nvidia, Micron and Intel all quite steeply in the red in pre-market trading. Investors are questioning the sustainability of AI spending following the breakthrough of a Chinese open source model. So there's this rising potential competition, and that is creating some deep pressure on that market this morning. Moving on to Netflix, which is getting investors quite worried. Its forecast for the third quarter was seen as quite underwhelming. It seems that the company is struggling to sort of rekindle this engagement from customers, and so we are seeing that really pressure the shares this morning. We're down almost 10%. And finally, another mover in the red is Intuitive Surgical, which is seeing that slowing demand for its surgical robots. Some of it is because of changes to Affordable Care Act subsidies, and some of it is due to growing uptake of GLP-1s, and so that is leading to a lot of weakness and slowing pace of growth for that business. And we are seeing that reflected in those shares this morning, taking quite the hit at 11% drop for Intuitive Surgical.
Chloe, thank you so much. Chloe Melly there in London. The chip rout deepening, the scale of the AI build-out now starting to really affect investor appetite. It's one of the risks our next guest said could derail conditions this summer. Joining us now is Andrew Sheets, Global Head of Fixed Income Research at Morgan Stanley. So, Andrew, you absolutely nailed the CPI data. You said it would come in a little bit less than markets expected and that would allow the Fed hold for the rest of the year. But you also said that a couple of risk factors, such as this sell-off in chips and potentially a re-escalation of the Iran war, could derail things. Are you now having to rethink your base case for the rest of the year?
Yeah, thanks, Bonnie. It's great to be here. So our economists did, I think, have a great call on inflation, and that remains a really important view for us at Morgan Stanley over the balance of the year. We don't think it was just about one print of benign CPI, that those inflation numbers continue to moderate through the second half of the year, and that allows the Fed to stay on hold this year and ultimately cut. So the Fed is not the problem in our view in terms of markets, but there is going to be ongoing concern around AI spending, and there is going to be, I think, rightly concern if the Strait of Hormuz does not open as normal. And I think for now, it's the AI piece in focus. It's such a big part of the economic story. It's such a big part of the earnings story. And it's such a big part of the positioning story for investors that there's just no way to get around it.
It's also such a big part of Kevin Warsh's outlook, right? How would this sell-off and maybe just a little bit less confidence in the AI story impact the Fed chair?
Well, I do think there's this interesting debate with investors because, I think core to Chair Warsh's view is that AI represents a boost in productivity, and a boost of productivity over time should be disinflationary. But I think when you talk to a lot of investors, they see a timing issue that yes, kind of eventually that productivity improvement comes through, but that productivity improvement is fundamentally, in the future, and the cost pressures are happening right now. The memory cost pressures are happening right now, and that doesn't change. So again, what makes us kind of optimistic about the inflation story is that we're starting to see signs of these numbers moderating, even though we know that memory costs are up a lot and chip costs are up a lot, and we're already in the midst of all this AI spending. But I think this is where, earnings season the next couple of weeks is really important. I think markets are worried that you might see some pullback in spending. That's not our base case. We think ultimately these companies remain committed to that investment. They remain committed to that spending. And quarter after quarter, we've seen these numbers revised up, not down. But I think the market, for all the reasons you just mentioned, is going to want to see evidence of that before it rekindles confidence.
So still not your base case. At the same time, the very beginning of earnings season, if even with the big banks, but basically for all companies, we've seen a sell-off, and that's not what you typically see in July. July tends to be a fairly strong month. So are you thinking about maybe just wavering a little bit in the confidence that you have for this earnings season?
Yeah, so I think it is a great point you make on seasonality. I think the last time the S&P 500 was negative in the month of July was 2014. It's been quite a while. But we do remain at Morgan Stanley fundamentally positive. I mean, we do think that you're continuing to see strong earnings growth. The global economy looks solid. We don't think the Fed is going to be as hawkish as markets expect. And, I think there's this debate over whether or not, kind of more AI spending or less AI spending is the better outcome. Our analysts, and we do a lot of work trying to marry kind of the top-down and bottom-up views across Morgan Stanley Research. Our bottom-up analysts remain very optimistic about AI spending, and that should continue to support that growth in earnings outlook. So, look, you've had very extreme levels of positioning. That can drive volatility. I think that's been part of what's driving the volatility. I think part of the good news is that when we look at those positioning measures, they've started to correct quite significantly. And I think if we see price action like we're seeing today, hang up over another couple of sessions, then you really are starting to wash out some of this positioning in an important way.
Back to the inflation data. After studying it, Andrew, and having made the right call and so on, is there still uncertainty about where inflation is coming from in this economy?
Yeah, I think there is an enormous amount of uncertainty. And again, we have had one good print, but prior to that, most of the prints this year have been too high. And I do think this is a challenge that Chair Warsh is facing. I think he is aware that inflation has been much higher than the Fed wants it, and that's been true, really over the last 5-6 years. I think you have a Fed committee that is worried that inflation's been too high and has been sounding more hawkish. And some of the productivity improvements that could improve that longer term story are still maybe some ways away. So I think with inflation, the market is really in a wait and see mode. I think a positive factor is if you look at some of the break-even inflation, the kind of implied inflation numbers that you can find on the Bloomberg terminal, you are seeing a big drop in those. And so I do think that there is some confidence. It's not just, our models are saying that. Some of the market implied numbers are giving a much more benign 1 to 2 year inflation outlook than they were a little while ago.
Well, in fact, if you look even further out, the 10-year moving more than the 5-year, which caused inversion. Andrew, is that telling us that the market is pricing in more transitory inflation in the immediate term or more elevated short-term risk?
Yeah, so I think this is another important factor that we're watching. So, I think coming into this year, there was a wide-ranging expectation that the yield curve would steepen. And as often the case, the opposite has happened. We've had a flattening of the yield curve, and that's been true in the U.S. and that's been true in Germany and other markets. And that intensified recently. Now, I think that flattening of the curve and any inversion, say, of 2s, 10s, we treat as a bad thing. When that's happened previously, it's been quite bad for fixed income and bond flows. And a slowdown in flows at a time when there is so much corporate issuance would be a pretty severe threat to the credit market. What you've started to see a little bit more recently is that curve steepening back out. I think a steeper curve is much more consistent with economic confidence and economic strength. And I think a steeper curve is also good for demand from insurance companies and banks and real money investors. So I think the steeper curve is what we should be rooting for. I think we've seen some of that, which I think is a good sign for fixed income demand. But it's been, a little bit touch and go, and we obviously need to see that continue.
Andrew, I know that your base case is still that there's no move from the Fed this year, and I think you're still thinking about the possibility of maybe a cut next year. But if there's a non-zero chance the Fed has to hike this year, where are you pricing that at? Like, how non-zero of a chance is it?
Yeah, no, I think it's still a realistic probability. I mean, again, I think if you look at what the market is pricing, and the market's very smart and made up of a lot of very kind of thoughtful investors, the market is still pretty confident that the Fed will raise rates. And so, again, I think this is something that, we need to take seriously. I think it's probably one of our more out of consensus views when we come to our macro outlook that they will not hike. But it's a very realistic probability. The market's assigning well over a 50% chance that it happens. And again, I think the challenge to markets with a hike is always that once you hike, the natural question is, well, when's the next hike? There's a little bit of this extrapolation risk that always exists. So again, even though we think we're going through a little bit of a chop and churn at the moment, our fundamental optimism for the second half of the year is the Fed stays on hold, and that's good for confidence. I think once you introduce even one hike into the mix, that extrapolation risk does present itself.
Yeah, it looks like the beginning of a cycle. Andrew, thank you so much. Pleasure speaking with you. Andrew Sheets of Morgan Stanley. Now to other top stories trending on the terminal this morning. President Trump's media company wants to sell traders fast access to his posts. Trump Media will launch a data feed meant for organizations such as high-frequency and algorithmic trading firms that need information quickly. It's the latest example of how Trump's political role is overlapping with his business interests. The president is the largest shareholder in Trump Media. U.S. regulators traced the Cyclospora outbreak to shredded lettuce served at Taco Bell. The parasite has sickened thousands in Michigan and other nearby states. And New York City Mayor Zoran Mamdani says no thanks to more money. The mayor said he'll forego an 18% pay raise that would have increased his salary to more than $305,000. Coming up, President Trump makes blistering accusations against the Chinese government. We recap his address next. This is Bloomberg.
Over a period of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history, resulting in China's illicit acquisition of 220 million U.S. voter files. That information includes names, addresses, phone numbers, political party preferences, and other sensitive data that would be needed to register to vote.
President Trump speaking last night, accusing China of interfering with the 2020 U.S. elections, accusations which have already been debunked. Bloomberg's government's Jonathan Tamari joins us now from Washington. Jonathan, why lob this at China and the Chinese president now, 2 months before the proposed visit to the U.S.?
Yeah, I think this is much more of Trump focusing on his domestic audience than he is on that visit from Xi Jinping in September. He is laying the groundwork, many people believe, many Democrats certainly believe, to say that that Congress needs to pass his voter ID bill that he's been pushing for several months and that he's not been able to get through Congress, and he's making that case last night. And many Democrats believe that because polls are moving against Trump right now, that he's laying the groundwork to claim that this election, if it goes in Democrats' direction, is fraudulent and possibly to contest it the way he contested the 2020 election. So I think this is much more of a domestic call. It is, as you point out, it's a little bit strange considering he just called Xi Jinping his good friend and is hosting him in September. But I think this is more of an election-focused speech than it is anything directed at international affairs.
So can we expect more of these speeches again then as, you know, the tempo picks up before the midterms? And if so, won't they be at odds with what's actually happening on the ground? We're still in Iran, for example, or striking Iran at least.
Yeah, I mean, the Homeland Security Secretary, Markwayne Mullin, is supposed to speak today to some of the claims that the president made last night. So, yes, it does seem the administration is going to keep emphasizing it. The issue for them, and even what many Republicans are saying, is that, yeah, voters are concerned about the cost of living, they're concerned about inflation. There is an ongoing war, which is usually the type of thing you would see a president use a national address to speak to. And so he's talking about things that matter very much to him, but are not, according to polls, the top issue that many voters are considering as they decide who they're going to vote for this fall.
Speaking of Iran and U.S. involvement there, we have tankers doing U-turns. We have the U.S. hitting southern Iran overnight, striking 6 road bridges. It's getting a little messier, isn't it, Jonathan? What are the odds that we, go beyond some red line that it's very difficult to come back from?
It's certainly looking more likely over the last week. The ship movement, according to our colleagues at Bloomberg, is an indication that the current blockade is actually a little tougher, a little wider than the previous blockade that the United States had imposed. So the president has tried military conflict. He's tried negotiations, has not gotten the results he's wanted. It looks like they're preparing to try to escalate, but we've also seen him not want to go back into a full-blown war. He's openly said that he's concerned about the economic impacts, particularly this close to election time. So he does not have a lot of good options or options that he seems really eager to take. But the military strikes appear to be escalating. It appears every day that we're getting closer and closer to going back to full-scale conflict.
Jonathan, thank you so much. That is Bloomberg Government's Jonathan Tamari. Chip stocks facing one of their worst months since the global financial crisis. The success of Chinese AI startup Moonshot's new Kimi K3 model is igniting fears U.S. companies may use Chinese models more and invest less in the Anthropics and OpenAIs of the world. Bloomberg senior strategist Neil Campling joins us now. We know that companies are already doing some of this. Neil, how good is Kimi K3 and is this another DeepSeek moment?
I was about to use that exact term, but you beat me to it. I mean, this is quite stunning in terms of the performance capabilities. Clearly, a couple of the leading models that we have out of the US are still ahead, but in Mythos 5. But as a way of example, Opus 4.8, which was launched by Anthropic just 6 weeks ago, this is now as powerful as that particular AI model. So the speed with which they managed to catch up is going to set some alarm in some of the AI frontier models in the US. And as you mentioned, with the chip sector coming under increasing pressure and the hyperscalers investing hundreds of billions of dollars in their capex, this is going to raise those questions again about whether these massive tech companies are going to see good returns on investment capital from these chip investments. It's a big wake-up call, I think.
It is a big wake-up call. What does it mean then for the hyperscalers and their capex plans? I mean, wouldn't they want to rethink them, quick smart?
Well, this is the problem. If we look at the CDS spreads of the hyperscalers in terms of the cost of debt, keeps going higher. More expensive from some measures that we've had than we've seen in some of the high-yield debt markets. It's a worry, especially when for the hyperscalers, free cash flow is now very much on the decline. So I do think that's a concern for the markets. And look out for what the hyperscalers say at the end of this month in their earnings reports and their plans for capex going forward.
All right, sounds like a warning to me. Neil, thank you so much. Bloomberg senior strategist Neil Campling. Sunday's World Cup final pits Spain against Argentina, but there's a different kind of battle on the sidelines. The world's biggest sports brands had been fighting for sales and for buzz. Bloomberg consumer reporter Tim Lowe joins us now. So going into the tournament, Tim, what did it look like? Who was battling who in terms of sponsorships and vibes, essentially?
Yeah, this is really like the high stakes competition, particularly between Adidas and Nike every 4 years now. And this time around, it kind of felt like Adidas had the edge coming into the tournament. They've been riding high on their Samba sneaker boom in recent years, whereas Nike has been struggling in this kind of corporate reset mode. Adidas also, they came out with their jerseys and their products months ahead of Nike, and also their kind of splashy brand campaign featuring Hollywood star Timothée Chalamet and Bad Bunny and Messi. So Nike was kind of reacting, and that was sort of where things stood at the start of the tournament. Since then, it's been the usual back and forth, leading up until the semifinals where there were 2 Adidas teams and 2 Nike teams. And Adidas came ahead on both fronts.
Yeah, exactly. So there are not 2 of each anymore. In fact, it seems like we're all Adidas for the final. Explain.
Yeah, and what a great position if you're an Adidas marketer. They have, on the one hand, Argentina with Messi. If they pull off the title, again, Messi essentially becomes a football god if he's not one already. And if Spain manages to win, Adidas happens to have this 19-year-old, Lamine Yamal, who is the heir apparent, particularly in Adidas's eyes, and what a potent vehicle they can use that for to sort of set him up in the world's eyes for years to come.
Absolutely. Tim, thank you so much for all of that elucidation. That is Bloomberg's Tim Lowe. Coming up, we're going to get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York, and now a look at what's ahead for your Friday trading session. Well, it's been a big week so far, but we're not finished with the economic data. We do get housing starts and building permits at 8:30 a.m. Eastern. UMich sentiment also comes out. That's at 10 a.m. Eastern. And then we get more regional bank earnings. We have Truist and Fifth Third reporting before the bell. But of course, it's your macro picture that really sets things up because we've had such a week, not just of economic data, but also earnings. We've really kicked off earnings season with fantastic earnings from the banks. And then we got Netflix yesterday. Netflix shares down pre-market. And look at this. It's the AI trade that's really taking over. We had some announcements out of China, a new Kimi K3 model from a company called Moonshot that's sending tremors through the market. It certainly sent Taiwan into a technical correction. Also Japan as well. Kioxia was down 16%, bringing its decline down to 50% of its market value. Obviously it had run up a huge amount before then, but those jitters across Asia are absolutely bleeding into the futures here in the United States. Nasdaq 100 futures down 2% almost, and the SOX index is down more than 3% after 2 days of declines already, so expect that to decline today. Yield-wise, we're seeing the 2-year down just a couple of basis points. We're back below 412. Similarly, the 30-year is down, but we're still pretty elevated there. All right, that is it for Bloomberg Brief. Surveillance is ahead.